Here's what's coming up on Retirement Planning Made Easy.
If we are too risky or aggressive in retirement when we start to take those distributions, if we have a market correction, that could dramatically impact how long your money is going to last if you are forced to sell at a loss.
A lot of times the piece that is missing, especially where we're at right now, is this. The tax efficiency planning is being overlooked by most people. They're leaving money on the table.
It's very, very difficult for the individual investor to try and time the market, we call it. It usually ends badly, I'll put it that way.
So we would look at it from the viewpoint of saying, how does it fit in? How are taxes assessed? How is it? What is your pension? How does Social Security work? All the different things that make a difference in your life that come together and connect the dots.
And now, the host of Retirement Planning Made Easy.
Welcome to this week's show.
We've got 30 minutes of great information planned up just for you.
And the show starts right now.
Today on the roundtable, we're talking about market volatility in retirement. This is a big one, right? It's that whole world of mitigating risk. And I think sometimes with people, they open their quarterly report or a monthly report, it keeps going up, 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 up. But really, Brad, what goes up
must come down.
Must come down. So let's talk about how people protect themselves from that inevitability of volatility in the market.
Well, I see it as there's two major ways things that we work on with clients. And one of them is called true portfolio diversification. So if you're concerned about risk, then we need to diversify your portfolio in a way that we mitigate that risk. And the second way is we like to walk clients through stepping out of the normal average asset class of stocks, bonds, cash, and moving into something that has a protection mechanism specifically set up to protect a portion of their money. And that can be very effective at mitigating the risk in their portfolio.
And do you find, Lucas, when people come in, they don't have these protection, principal preservation pieces in place? They might think they do.
Yes.
They might think that, hey, I'm safe here. This is conservative, what's been set up for me. At least that's what I've been told. But the fact is, they may have a little bit more risk than they anticipated.
Yeah, we see that all the time. We might work with clients that have outside accounts and they come in and say they're conservative investors and they have conservative mutual funds, but they don't understand that those could go down over time. So we do explore and educate on the event of those accounts that do offer that protection.
And really what this comes down to at the end of the day is diversification, which I think advisors use as sort of like, it's an easy word to say.
Yeah.
Right? And it's easy with a big old pie chart on a piece of paper. Oh, look at this, the diversification. But the diversification that needs to happen today has a lot more asset classes than maybe the old way of doing it, stocks, bond, cash. Fair statement?
Very fair. And we're not saying to cut out risk altogether. You can still be as aggressive as you want to be or little aggressive as you want to be, but there's just ways that we blend it and put things together where you are truly diversified.
And this is a proprietary process at TAG. You guys call it TOP. Tell me what TOP stands for, okay, and how do we use that to potentially diversify all the different areas?
TOP stands for the TAG optimization process. And what we're doing with that is we're looking at every aspect of your financial life and trying to make them communicate with each other. And so in this case, we might look at, say, income planning or retirement income planning, we like to call it, because risk is very heavily tied to retirement income planning. And so what we might look at is, well, how often does this person need to withdraw from the account? If they're withdrawing at a very regular basis, then they need a portion of that account or their total portfolio in something that is completely risk-free. Because in the event that the markets have taken a bad turn, they need a place to go, a safe refuge for that money where they can withdraw and continue to live. You can't just stop taking income because the market dropped. And so they need something that mitigates that risk.
Yeah, and I think some people think, hey, I want to beat inflation, right? So I have to take more risk so that I have a greater return. Maybe that mentality today isn't correct, right? Do I need to take that kind of risk to get the right type of return, to beat inflation? There are things out there that are principal protected that offer a fair rate, right?
Yeah, tons of accounts out there that people aren't aware of, but you can still have that protection aspect and still get some pretty modest, decent returns. So yes, we do have options to still beat inflation and stay protected.
Brad, if I was to ask you, is there a way to turn volatility into an opportunity, you would tell me?
Yes, definitely. Volatility is how people make money in the markets, right? Is when the market goes down, you buy, and when it goes up, you sell, right? Buy low, sell high. However, too much volatility can cause problems in your portfolio. And it's very, very difficult for the individual investor to try and time the market, we call it. It usually ends badly, I'll put it that way. And so we need to smartly use volatility in a client's portfolio and not just rely on volatility in order to make retirement work.
And where does the whole active management play into this?
That's where a good financial advisor is going to be looking at a client's portfolio and meeting with them regularly and working on their goals and actively managing their portfolio for risk so that it aligns with how they feel about risk rather than what the overarching theories are about risk nationwide or worldwide.
Brad, Lucas, thanks so much. If you want more information about this topic, hey, pick up the phone right now and give us a call. We'd love to start a conversation with you. And don't go anywhere. We'll be right back.
You're watching Retirement Planning Made Easy.
Now more than ever, it's vitally important to review your current retirement plan and get an educated second opinion. Hi, I'm Lucas Dengler, and for many American retirees and pre-retirees, this is a confusing time. As a local business here in the Quad Cities for over 30 years, we have educated thousands of families on how to retire well through all market conditions. Call now or scan the QR code on the screen to schedule your complimentary consultation. The Advisory Group, providing financial peace of mind since 1991.
Hi, and welcome to this week's Mastering Retirement with Tag. I'm here with the Professor Brian, and we have a great topic today. Class is in session. What is tax efficiency planning? And before we get into that, I want the people at home to know, Brian, that Tag really specializes in the tax piece right now because taxes are a huge variable in retirement. And the way times are, there's all this uncertainty. This piece really needs to get nailed down in someone's retirement, right?
Correct. In today's environment with the tax rates the way they are, there could never be historically, whether in the past or in the future, a better time to be looking at this.
So let's talk about positioning assets so that we can optimize our taxes. Where does that start?
It starts with planning again overall, looking and assessing your current situation and comparing that to other avenues of going for tax efficiency, looking at what you would have if you did it one way versus another.
So I'm going to ask you, ready, point blank? How familiar are you with the tax code?
Very familiar.
Ooh, that was a very confident, very familiar. Because this is an important part, and I think a lot of pre-retirees and retirees don't know. Hey, there are things in there that are written for you that you can take advantage of. Sometimes people will hear them and say, oh, I don't believe that's real. It's in the tax code, right?
It is. And what we see a lot of times is a lot of people do a decent job. And I'm talking advisors as well as people we meet that may start to work with us, whatever. But what we see a lot of is it doesn't mean they haven't done some retirement planning. Doesn't mean they haven't done some investment planning. But a lot of times the piece that is missing, especially where we're at right now, is this. The tax efficiency planning is being overlooked by most people. They're leaving money on the table because they're not fulfilling the total tax range that they could to optimize their situation.
Is it important to be looking at someone's tax returns? Is that an important part of this in the whole tax planning?
Definitely. It goes tax returns, but we take it beyond tax returns. A tax return is something that we would need to work with to do the proper job in helping people come to the conclusion of where their sweet spot is in tax efficiency planning. But we go to the another step. We actually use programs that help analyze this, and we can play what-if scenarios with our clients to help them look. If we do this, here's how your tax picture changes and back and forth.
And that tax piece affects all different parts of your retirement, whether that's income or estate planning or a reduction in fees here, right? All of those pieces.
Everything.
And here's what I wonder, and I don't have any stats and I don't have any data, but for those of you at home right now, I'm wondering, does your advisor, has he ever looked at your tax return or spoken to you about taxes? If they're not, why is that a bad thing?
Well, the issue, they're missing out on something. It could
and
be,
that could be a big something.
A big something. You know, it's an easy way to have more money in retirement without working any harder to get that money. So that's probably the best thing to be said right there.
I want you to say that again slower. It's already there, right?
It's already there. The money you have is the money you have. So anything you can do to have that same money give you more is a good thing.
Yeah, because you're not going back to work.
No.
It's not like, oh, okay, well, if I didn't get it this year, I'll maybe make that up next year. No, that's gone. It's absolutely gone. Let's take a minute and talk about Roth.
Okay.
And why is this an important topic right now?
Well, a Roth comes into tax-efficient planning. It's not necessarily the only thing within tax-efficient planning. Technically, you could take distributions and do something else with the money, and it would be tax efficiency planning. It's just as long as it's part of the plan. But the Roth comes in because you get to keep the money, and now it's tax-free.
And you get to keep it tax-free. Hey, let's take a second, because I remember when I first got educated on these things by you, Brian. And what are some of the other ways that pre-retirees and retirees can plan properly to have tax-free income in retirement?
Well, there's other ways. I mean, obviously the Roth conversion we spoke about, but the other thing is you could do some things. Charitable would be another thing you could do. There is charitable IRA distributions where you could actually do that to charities and have it count. It would not reduce, you wouldn't pay tax on it. Now, there are some age requirements on that you would have to be aware of. But there are other avenues that we go through the whole picture to determine what are you trying to accomplish and do. Most of the time it does lead that you want to keep the money. You just want to take advantage of the tax rate environment we're in today and keep that money for yourself at some point down the road. By the way, it does set up well for your beneficiaries also.
Yeah, and I've got about 1 minute left here, and the one piece that I want to talk about, and again, you guys taught me this, is that life insurance, you can potentially use that for tax-free income. How does that work?
Life insurance is another avenue that fits right into this same type of planning with tax efficiency. It's more, most of the time we're using it more when they are doing maybe legacy planning. But it could be used in conjunction with some people where you're doing it for maybe some type of other tax-free income.
Brian, thank you so much. Hey, if you have questions on any of the things we spoke about here today, pick up that phone and give us a call in the office. We'd love to start a conversation with you. And don't go anywhere. We'll be right back.
You're watching Retirement Planning Made Easy.
We can talk all day about Social Security, taxes, healthcare, income, and risk. But the truth is, your financial journey is unlike anyone else's. Hi, I'm Brian Nauman with the Advisory Group. Even a small difference like your age, assets, risk tolerance, or longevity can mean a big shift in your retirement strategy. That's why we created our customized TOP program. It focuses on the 6 most important issues that can help you make the most of every dollar you've saved for retirement. With over 30 years experience, we've developed a holistic, personalized approach to financial planning that puts you first. Please don't leave your financial future to chance. Call today or scan the QR code on your screen to schedule your complimentary consultation. The Advisory Group, providing financial peace of mind since 1991.
Hi, and welcome to this week's Retirement True or False. Brian, Lucas, I have some great questions this week. Are we ready?
Ready.
Lucas, I'm going to begin with you. You don't need to use a different strategy when you move from the accumulation stage of your retirement to the distribution stage of your retirement. True or false?
That's going to be false. As we are working and accumulating assets, we are focusing on aggressive growth. And as we move towards retirement time, it's a great time to look at your portfolio, look at those risk tolerance levels, and make adjustments as needed. If we are too risky or aggressive in retirement when we start to take those distributions, if we have a market correction, that could dramatically impact how long your money is going to last if you are forced to sell at a loss. So it's very important to adjust your risk as you get closer or at retirement to make sure that you have some protection if those markets were to go down.
Luke, yeah.
And risk comes in many forms. There's not just investment risk, there's also tax risk, healthcare risk.
Yeah.
So there are different things that we include in that risk than just looking at that. And that can make a big difference on your portfolio.
Yeah.
It goes for the case, gentlemen, of comprehensive wealth management planning is the answer. Not a singularly focused area, but those 6 areas in your top program. And I'm going to ask you to take a minute, Brian, and talk about that.
The top program is the tag optimization process. So it's something we developed at the advisor group to help people understand more about what is needed to have a properly diversified or optimized portfolio. So we take into account not just retirement planning or investment planning, which many people do, we also take into account income planning, healthcare, taxes. So we do a lot of the other things that are in there to make sure they all talk to each other, and that's the way to develop a strong portfolio for your future.
Brian, next question for you. All types of annuities function in the same way for retirement income. True or false?
False. Okay. While there are many annuities that do offer some kind of income feature where it can be guaranteed either for life or whatever, they are vastly different. And again, being independent, one of the advantages we have is we can pick from the cream of the crop. So looking at that issue, we can help look at each one of our clients' situations independently and determine what is this income for, and then pick out or help them look at which companies fit that best for their situation.
I think the word annuity is pigeonholed today into it's one thing that does one thing, and people have a very firm negative view or a very firm positive view of that. But I want you to just take a minute and reiterate that these products are enormously different. And there's 3 main types. What are the 3 main types?
Well, first I'm going to give you an example of something that just recently happened.
Great.
Okay. Last week we had somebody come in, we were going through it and so on, and he wants to work with us, and he knows we can do overall, planning in many different investment areas. Okay. But he was just having trouble with the annuity area. He just could not wrap his mind for some reason or feel right about the word annuity. So a lot of times what we try to do and help somebody with is look at why would you do it. Call it what you want to call it. What we're trying to do is diversify the portfolio in a way that gives you something different than everything else within the portfolio. And today's annuities are completely different than the annuities of yesterday. And that's what a lot of people don't realize and looking at it and so on. And obviously our goal is to help somebody develop the best, strongest portfolio they can have from all points of view. So what we look, and being independent, really it doesn't matter to us what type of program somebody uses as long as it fits what they're trying to achieve and how it's going to help them.
And by the way, what is a pension? Is that not an annuity?
Pension is a form of an annuity. It usually is backed by an annuity in most
Could
cases.
we make the argument that Social Security is an annuity? Is that a fair statement, or am I reaching?
It's going to act like an annuity,
Right.
yes.
Lucas, last question for you. The single biggest concern of retirees and pre-retirees is the fear of outliving their nest egg. True or false?
I'm going to say true on that one. I think that's one of the most common worries for retirees is that they're going to outlive their money, which could happen, but with the proper planning, and we sit down with clients all the time and look over all their accounts, do those annual reviews, make sure that they are on track. If they are withdrawing too much money, we need to get ahead of that before it's too late. But I would say that that's a huge worry, but that's why we're here to help ensure that things are going to be okay and you're still going to have money well beyond.
You know what I think an interesting proposition in retirement is, and I've heard this and we've spoken about this, is that some people that are heading into retirement believe I'm going to spend less in retirement. They might be spending a bit more,
Might
right?
be spending more.
Vacation, grandkids,
especially in the early
travel.
years of retirement.
Yep.
Okay. So a lot of times when we're going through planning with someone, we talk just about that and we go through the issue. What do you like to do? Get to know the situation and so on. And a lot of people want to travel or see their grandkids or spend money on their grandkids, whatever the reason might be. And while you're the healthiest from retirement, say the first 10 years, maybe 15 if you're fortunate, that's probably when you're going to spend most of your money. So you probably need as much or more, or at least look at what that should be for you.
And the boomers are staying healthy. These are not folks sitting in a rocking chair.
No.
They're getting out there and doing it.
Yep.
Guys, thanks so much. If you want more information about anything we spoke about here today, hey, pick up that phone, give us a call. We'd love to start a conversation with you. And don't go anywhere. We'll be right back.
You're watching Retirement Planning Made Easy.
At the Advisory Group, we understand the importance of smart tax planning. Maximize your returns and minimize your stress with our unique tax efficiency strategies. Don't let taxes weigh you down. Keep more of your hard-earned money. Call the Advisory Group today to experience the freedom of tax efficiency planning. Call now or scan the QR code on your screen to schedule your complimentary consultation. The Advisory Group, providing financial peace of mind since 1991.
Hi, and welcome to this week's Ask Tag, where you email your questions into us and we answer them right here on the show. Brad, Brian, I've got some great questions this week. Brian, my first one is for you. And it's from Jordan in East Moline. Our advisor years ago set up our portfolio with half bonds and the other half being in the market. We're set up to pull 4% out per year. We're worried that this strategy, along with my wife's pension and our Social Security, may leave us short later in retirement. Are you familiar with this strategy, and is it a good one?
Yes, thank you, Jordan. That is a common question we get a lot. It really goes back to the issue, will I have enough for the rest of my retired life? The 4% rule we are very familiar with. It is a good measuring stick, and that's the way we would probably look at it when we do planning with you and go through the situation of looking, is it enough? So it's a piece of the puzzle, we would say. So while the 4% rule is something you can use, it's like a lot of things in life, it's rule of thumb, things like that. We would actually get into looking at things in a more detailed situation. So we would look at it from the viewpoint of saying, how does it fit in? How are taxes assessed? How is it? What is your pension? How does Social Security work? All the different things that make a difference in your life that come together and connect the dots.
Brian, is it fair to say that this is kind of like old tech? Meaning, very popular formula in the 80s and 90s when the market was insane, going up, and 4% made sense. I read somewhere in the Wall Street Journal that really you have to cut that in half now to like 2% to still maintain your portfolio for the balance of your life. And it's kind of like the old flip phone and the new modern Apple iPhone. There's just newer tech out there today to structure a portfolio. Fair statement?
It's a fair statement. There's a lot to work with today that is available that wasn't available when that rule came into existence. But again, planning will take care of that, and we'd be happy to go through that with you to help you determine what's right for you.
Wonderful. Brad, my next question is for you, and it's from Linda in Clinton. She writes, I'm already retired and was married 10 years before divorcing. I've heard somewhere that I'm entitled to collect my ex's Social Security. But does he have to be retired before I can collect his Social Security, which will be higher than mine? If he's not retired, can I collect mine and then change over time to when he retires? I'm so confused about this. Thanks for your help.
Well, hi, Linda. That did sound confusing, didn't it? That's Social Security for you. You may be entitled to his Social Security. You're correct about that. Now, it's not as simple as whether or not you were married. There's a few more caveats to it. But you might be entitled to it, and it might be in your best interest to take it. You might not know this, but you can actually take your own and then take his, which might be even more in your best interest. Now, that's something we'd have to look at with you to see specifically whether it makes sense for you. but you were married to him, so you are entitled to a portion of his Social Security, assuming you meet a few caveats. So it's something we'd love to look at with you and do some planning on.
And we do have Social Security planning software that we use all the time with clients to help them to assess many different ways of looking at Social Security.
It's just one part of the puzzle, gentlemen, right? Of comprehensive wealth planning. You got to get the Social Security piece right, especially if you have time.
Yeah.
All right, Brian, last question for you. It's from Mike in Pleasant Valley. He writes, my company is offering me a lump sum or a pension. I like the lump sum idea, but my wife wants me to take the pension. How can we know which one is best for us?
Thanks for your question. We really appreciate the idea of it because this does come up, and this is probably one of the most confusing things that you would do with planning in regard to pension. Because what happens a lot within the pension world is you're looking the stability of a pension. That seems very attractive. So I can see why your wife maybe wants you to go that direction. The lump sum, though, you have more control over and could make a difference in your life in different ways, and you can piece it in more flexibility. What we would do is help you assess both. We would look at it from the issue of saying, what is in your best interest to how this fits into things within your planning? What should you do? You know, what do you need within your plan? Do you already have pension money from other pensions coming in? So there's a lot of different ways to look at it, but we definitely can help you assess that and look at what is right for you.
Follow-up question. Do you sometimes have to play marriage counselor? People come in and one party wants this. There might be a little more conservative, right? One party might be a little risky. How do you balance that?
It does happen, but through the years, I think we've done a really good job of helping mitigate that and help out in that family dynamic.
Yeah.
Wonderful. Brad, Brian, thanks so much. If you want more information about anything we spoke about here today, hey, give us a call in the office. We'd love to start a conversation. And don't go anywhere. We'll be right back.
You're watching Retirement Planning Made Easy.
We can talk all day about Social Security, taxes, healthcare, income, and risk. But the truth is, your financial journey is unlike anyone else's. Hi, I'm Brian Nauman with the Advisor Group. Even a small difference like your age, assets, risk tolerance, or longevity can mean a big shift in your retirement strategy. That's why we created our customized TOP program. It focuses on the 6 most important issues that can help you make the most of every dollar you've saved for retirement. With over 30 years experience, we've developed a holistic, personalized approach to financial planning that puts you first. Please don't leave your financial future to chance. Call today or scan the QR code on your screen to schedule your complimentary consultation. The Advisor Group, providing financial peace of mind since 1991.
You're watching Retirement Planning Made Easy.
Thanks for watching today's show.
And if you want more information about anything we spoke about here today, give us a call in the office or go to our website.
The Advisor Group, providing financial peace of mind since 1991.